I have a couple deals to review for students. Before I do that, is there any questions or anything that anybody wanted to talk about tonight? Any questions? Regarding the topic we discussed last week, can you help me out with that a little bit? Okay, I'm gonna let Devin type. I'm gonna bring up the deals that we're gonna review tonight. Devin, you keep typing. I'll answer your question. So this deal, okay, a couple of people are typing. So Rodrigo, you sent me this deal, correct? Okay, good. All right, and we're looking at doing a wholesale with it. Okay. So I reviewed the deal. We'll go through it together. Okay. So uh, it looks like purchase price is 770. You believe you can get it for that. Repairs would be 10. So it put us at 780 total. The gross rent from a 6 unit, is this fully occupied right now? Is that right? Okay. So it's 5,833 per unit roughly. Vacancy maintenance and property management, the standard 20. Okay. And then exact expense are 17. We'll look at those in 1 second here. 17%. Okay. Rodrigo, is that number verified? These are the expenses that were sent to you by the seller? No, okay. You're estimating, is that right? Devin, I'm going to read your question. You said that you split the profits 25/75. Is that after the contractor has been paid uh, expenses? I buy a house for 200K and we repair it for 50K, and the contractor says he will cover the 50K of the repairs. ARV is 300. Do I split 100K with the contractor or 50K with the contractor? So, in Devin, that was an example. You'd obviously have to run the numbers to make sure it made sense for both. In that case, if the contractor is putting up the 50K and that's the cost of the repairs, you'd be splitting the profits. So that could, be 75 for him and 25 for you. Depends if the 50K covered his actual rate for fixing it, or it was the cost to him. In that case, was the cost to him, that would be different. So at the end of the day, it would be really a question of what's left over and what do we need to make sure the contractor gets, depending on how they participate in the deal, right? So it's not simply, we can't, that'd be oversimplifying, Devin, so we'd have to look at the numbers. But at the end of the day, the idea is to bring the contractor in to cover the costs, making sure that he's profiting and you're profiting at the same time. Does that make sense, Devin? So it's not as simple as that was just an example of 25/75. The idea was he was bringing in the cost. So the example you have works. You'd be splitting the 100K, but the 50K, you have to take the 50K out. So then it would be 25 each. Say he would get 75, you would get 25, right? But the 50K covers his costs of doing the project plus what he would be making on the project. You see what I mean? Does that make sense? So Rodrigo, Nicola told you that told us that after paying taxes, insurance, and utilities, the net income would be 5,000. So that's not the right number then. What's the gross? What's the gross? Okay, so I'm gonna stop for a second, Devin, and answer Devin's question. So if the profit was 100K, even though contractor is covering 50K. So Devin, again, it's not that in your example, is the 50K his cost or is he being paid for it? You see the difference? So if it's just cost, the cost of him doing it, right? So he hasn't been paid labor, and he's bringing forth cost of the repairs, then that would be different. We'd have to know what the 50K was. Is 50K what it cost? What it would cost if I got him to do it? Well, then no, I would split 25-25. That's what I would do. Because he got 50K including labor. So he got paid, right? So I would make 25K and he would make 25K, and the 50K would be a cost of the rehab. Now the advantage for him, so he's making an extra 25K is what's happening, Devin. He's making so that'd be 75, 25, saying that we bought it for 2 and we sold it for 3. Does that make sense? Okay, good, excellent. At the end of the day, Devin, we'd have to run the numbers, right? We'd have to run the numbers for sure. But the concept that the example that you shared with makes sense. So Rodrigo, so 5,000 is not the gross income, is that correct? Gross income is 6,000. Okay. Okay. Okay, so the expenses here are based on what? Okay. So 6,000 is the gross income. What? So the expenses were listed 12,250. Sorry, 240. Is that right, Nicola? Yeah. Okay. Okay. So the expenses. That's what was in the listing. The 17,000. Sorry, the 12,240. Is that right, Rodrigo? Is that right, Nicola? This is exactly what I got from him. Okay. All right. Okay. So I would believe, let's believe that's the case. Okay. So so Nicola, is the gross income is 6,000 monthly, including utilities. After paying property tax, insurance, utilities, net income is 5,000. That's what came from the listing. So this number here, what's this number? 17. Where did this come from? Is that an estimate based on that 6,000? Like it's 1,000 a month, or this is what they had in the listing, and that's where you came up with the 5,000 per month. So that's the number, and then you said, okay, well, obviously it's 5,000 a month then. Okay, I see. All right, so it would be 6,000 in here because this is gross income, so that expense is taken off. So we'd still put the 6,000 in. We just make sure that we had the proper expenses. Okay. So this particular property, Nicola, because I'm gonna ask you because you're a realtor. What would this retail for after it was fixed? Roughly. Okay. Well, I can say this that the property, including that $1,000, that was the difference because before it was pretty tight. But if these numbers are correct and the 12,400 is correct, then this one is just under 10%. So it's very close to working as a property. If we could get a 90% mortgage here and 10 here. Try that again. There we go. This property could work as a cash flow property. So the property, as you can see, the cap rate's below 10 clearly, but it's right on that edge. 6% really is what we can work with, right? So it's right on the edge. We'd have to get a 90% mortgage with 10% out of pocket, which someone else was telling me, their mortgage broker, another student was telling me their mortgage broker is giving them, with CMHC fees, the 10% down and 90% financing. Now, the one thing that's going to be a challenge for an investor is that this is a 6-unit building. So you're probably going to be challenged to get an 80% from the bank. You'd probably be more 65, which would mean that we would need, we'd need some money, 65. We'd need some money or financing from the seller. So let's say that was at 6, and then it becomes right on the edge. So as a cash flow property, this would be tough. It's on the edge. You'd have to do something to make it work. A VTB would probably be necessary to make this work because you would only be getting 65. If you were wholesaling this property, we'd have to know that the after repair value, the ARV, is enough to make this work. Now it's a $700,000 property, sorry, $800,000 property. So the challenge is as you get into these higher end properties, the discount has to be bigger for you to wholesale it and pass on those savings to the end user. Unless you're selling it to an end user who, say, lives there. This is a 6-unit building. Now, technically, the cap rate on this in this area would be considered really good. So, but you'd want a buyer in place for something like this, right? You'd want somebody who's looking for a multi-unit building, who's looking, this would fit something that they would be interested in. Because once you take this property on, if we're not getting more than, this $20,000 difference, that's too tight. Because to liquidate the property would be, it would cost you to liquidate. Legal and your realtor fees would pretty much wipe out any money that you made on this property. So we'd have to know that the property ARV was higher than the 799. Does that make sense? There's just right now, it doesn't look like there's enough profit in the deal to wholesale it at 799 if you have 780 into it. So maybe what we can do at this point is find out what the ARV is going to be. Nicola, maybe you can work on that. Find out what the get your get your eyes on it and maybe think come up with a number that's realistic, and then we can look at whether this is legitimately a wholesale. The other thing I would do is, Rodrigo, I see if I know you guys are working together on this, so maybe find out if the seller's interested in a VTB. Also, if there's anybody that you know that's interested in this type of property. You could bring in an investor on this property to make it work. The dilemma or challenge is, 6% is not a huge amount that you're paying for that investor. So it would probably be better to have a split, a straight split on the so somebody comes in for 25 or even the 35. Let's go 25. This would work now. You can make that work pretty much between sharing the deal with someone else that puts up the dough, right? Or at least 25% of it at no interest and becomes an investor in the deal. Does that make sense? So right now we want to see what the ARV is, and then we can look at, what potential is here. Anybody have any questions on this one? There's been 77 days on the market. It's been 76. Oh, that's good. Only one picture. Okay, well, I mean, obviously this 10,000 in repairs, that was in the listing. The 10,000 in repairs. No, just one. Just considered it. Okay. All right. Well, I would, 77 days on market. Yeah, I would guess that there's some stuff that has to be done to this property. If the cap rate on this property was 6, that would be considered a good deal in the Mississauga area. So for a 6 unit. So I'm wondering if there's either more expenses and or repairs for this type of property. But I mean, you can't know until you ask, right? So ask, reach out, find out, get an after repair, and see what happens. Yeah, sure. If it's in the area and it's close to you, why not? Go look at it. But I mean, talk to the seller, and you can get some information, maybe the seller, and find out, why they're selling, and maybe if they don't sell it, what's their next steps, because it's been sitting 77 days. Maybe the seller, has the price moved at all? Has it dropped since those 77 days? Or has it been the same price the whole time? Same. Okay. Well, maybe they're ready to move the price. Or maybe they don't care, right? Maybe they're just, this is my price. I'm waiting it out. It's fully occupied. That's a plus. But it might be something worth taking a look at. Definitely. A 6 cap rate, we can make that work with the current mortgage rates and mortgage terms. So I think it's something worth looking at for sure. And of course, the after repair value. Okay, Rodrigo, you have any questions? Rodrigo, you good? Any questions? Anybody, any questions on this deal? Okay, so we need to find out more information. That's the end of the day. We need to find out more information. Yeah, that's a good idea. Okay. Yeah, have a conversation and see what you guys can come up with, and then we can revisit it maybe next week. Okay. All right. Okay, let's look at this next one here. Okay. So this one, one second. Make sure you're on the call. Okay. So this is a property there's two of them here we're looking at, two properties. Okay, here's the first one. Now, anything you want to say about this property before we get into it? Okay, so there's a situation you remember from last time when we talked about it, it was considering 20%, but then the bank is giving me 90%. Okay, so yeah, they told you they'd give you 90% financing on it. Now, did they explain why they're doing that? Because obviously they know it's an investment property, right? It's a 4-unit building, right? Can you share which bank that is? CIBC said they would give you 90% loan to value on this property. You put 10% down, right? And they also said there'd be CMHC, right? Okay, CMHC. There'd be CMHC. There'd be insurance on it. CMHC, right? CMHC. So basically, insurance on the mortgage you'd have to pay. I would have to pay 12K. Okay, so 2.75 plus 12,000, correct? That's the rate they offered you, right? Okay. Did they also offer you the ability to roll that 12K into the interest rate? Did they give you like a second rate? You know, you could pay the CMHC up front, the insurance up front, the 12K for the mortgage, or did they also say, or you can pay 2.85 on the mortgage? Would be 1550. 1515. 1515. Here, that's without CMHC or with CMHC? Like, is that including the fee or not including the fee? I'm gonna guess that's the mortgage rate without the 12K. So it sounds like they'll give you the rate is 2.25 or in around there, 2.25. If it's 15, it's got to be maybe 2.6, 2.26, 2.3, 2.31, 2.32 maybe. When you thought you got it, eh? So 2.32 looks like. So still, even if you're paying the insurance up front, the 12K, this is still, you know, still works, still good. The dilemma or the expenses that you have here, taxes and insurance, 3,400. We have the vacancy, and then you have another 3,000 here. What's that for? This is an older sheet. Let me do something here. In 1 second. Okay. Okay, give me 1 second, folks. 437. Give me 1 second, folks. I'm gonna just take a second to put it in the more updated one. Which is including you right now. I can use this sheet, that's okay. Alright, here. I'm just gonna move this over, give me 1 second. 4, 3, 7, 1, 2, 3, 0, purchase price 437, 3, okay, 3, 3, 4, 7, 5. The ARV is, okay, that's fine. It's a 4-unit. Okay, so here looks like insurance and taxes, so 6,400 here. Okay, so give me 1 second. 6,400. We're gonna put it other. 0. Okay, that fixes that. Yep. Okay. Yep. 1 sec here. Okay. Now here we got 90, 0, and 10. We have 2.32. And we have. Okay. Now this looks right. Hold on. Okay. Let's see. To be exact, the rate is 2.74 and monthly payment is 525. Okay, so I don't get that. No. So 30-year mortgage is going to be 1,600. They got you at 15,257.8. Are they mortgaging 3,933.300? Is that what it's showing? Oh, blend CMHC, that's good actually. That's pretty cool. That's I like that. Everybody, you might want to grab that because that'll actually bring up CMHC if CMHC was rolled into the mortgage. There you go. There's my man. Good job, buddy. You look good. If you don't know, Nicholas is a mortgage broker. Sorry, a realtor. Let's see what you got here. Buyers without contract. Okay, so where is the new listings that works for you? Calculators. Oh, there you go, buddy. Good job. I like that. That's good. 363,709. Okay, give me 1 second. So let me go back. $709. Okay, and the price is 437. That's what they said the loan would be. Well, 90% of this is this. So it's off by 6,363. That's why. So give me a second here. I just want to check something. No. No. 83, 4. can't get the exact number. I don't know how they're coming up with that if it's 90%, unless they're rolling in, let's see, unless they're taking off, what are they taking off? And you're putting up 10%, you're sure. It worked at 438. That's not going to make a big difference, I don't think so. No, that's not gonna. It's gonna be a bigger number. Maybe they rolled in 80. No. How are they mortgaging 438? Sorry, how are they mortgaging? How can your mortgage be 463? That's let's see, 63 would be more like, let's go back to 90. 10 for a second here. 63, that's $30,000 difference. So they sent me approval certificate. So they pre-approved you for that mortgage. Is that what they're saying? They pre-approved you for. Okay, so they pre-approved you for a mortgage of 438. Is that what they're saying? They said, right? That's what the doc says. Yes. Pre-approved, right? Okay. So, but they're saying you only have to put 10% down, so 43,800. Is that right? When you sat with this guy, he said he would let you put down 10%, right? Did he give you the number 43,800? Okay, so this is what I don't understand. If it's 43,800, how can it be 360? Is the mortgage? Do you see my problem? If you're putting down only 44,000, there's going to be more than, there's going to be, 390 and change. Like it's 80 won't work either. 80's not going to work. Maybe 80 plus the 12, maybe? No, because he said he would let you put only 10% down. I don't know how they came up with that number. I don't know. Yeah, I don't know how they came up with that number. If you're only putting 10% down, even with the CMHC at 12 grand, it's still not going to work. I mean, I'm not saying it's not going to work. My apologies. The numbers don't match up. So what they sent you, yeah, why don't you send that to me? I'll look it over. But you might have to reach out to him tomorrow just to get clarity, okay? No, I don't. I don't read French. You know what? Do this. Call up the bank and ask them for two things. Ask them to walk you through it again, with you depositing 43,800, and also ask them for a copy in English. They should have that copy in English and in French. That shouldn't be a problem for them to do that. Okay. Also, ask him some questions about, the 10% down, which you think is wonderful, but, why is this, what is this that's allowing you to put 10% down? Because I'll tell you, most institutions are looking at 20. Now, if this guy's offering you 10 and he's at CIBC, I mean, that's something we'd probably want to share with everybody. Because, 10% down, basically, you don't need any creative financing. If you can get 10%, I mean, you can go hog wild. And if the banks are offering 10%, they're really hungry for mortgages versus the standard 20%. I'm gonna. I'm gonna call my guy tomorrow actually and ask him about this. He used to work with CIBC. Now he's a financial advisor. He still does mortgages, so he'd know about this. I'm gonna find out what I can on my side in Ontario. No, I'm sure it's fine. If the guy told you 10%, I mean, that's something you don't misunderstand. If he told you 43.8, 43.8, it's 43.8. But obviously, we got to find out this property, and this is the property with the young lady that you used to rent from, right, years ago. Yeah, this is a great property. This is a real good. You talked to you talked to Adnan? You get a chance to talk to Adnan? Okay, good. So that's good. So you got legal representation now. That's awesome. Um, he can definitely help you out. He's an excellent contract lawyer in my experience, at least. Um, so yeah, 10% works. To tell you the truth, this property at 20% still works. You know, let me see. I'm just double checking that, but I'm pretty sure we looked at it and 20%. Even at 20%, yeah, like at 20%, this is still a great deal. Cap rate 6, we can make it work. At 6, we can make it work. Now, the thing is, remember we talked about this, the expenses, right? You said that the tenants pay all the bills, right? Remember you told me that? The tenants pay all the bills, so this is just taxes and insurance, right? So yeah. So you might want to. Did she send you an income and expense sheet? Have you asked her for that? Remember we talked about that? Okay. Did you get this under contract yet? Okay, good. Okay, good. You said good, good. Okay, that's all right. That's good. That's that's the kind of guy he is. I mean, if he feels like someone else can do better for you at this time, he's gonna send you there. So that's awesome. And the guy has asked me if it's a condominium or residential. It's residential, right? It's not a residential. Well, it's a 4-unit building, right? Correct? It's a 4-unit, a fourplex. It's not. I said residential, so I'm waiting for him to send me the paper contract template. Okay, good. Good. It is residential. These aren't condos. These are apartments, right? Yeah, yeah, yeah. They're all connected. Yeah, yeah. Okay. All right. Good. Okay, good, good, good. All right. Let's wait till he gets back to you. Talk to the bank tomorrow, though, okay? Okay. Any questions on this deal from anybody? Anyone? Does everybody understand the conversation we're having now, right? Is there any questions about anything that I've said? Um, this is where you want to ask those questions. And the best thing is to do, obviously, is as we go through this deal. Any creative financing for this deal? Well, I mean, if he can get 10% now, he has 20% to put down. But if he can get 10% to put down, I'm telling you, this deal is, I mean, it's good to go now. At 10%, at 20 it works, but at 10, it's outstanding, like outstanding. If those numbers are accurate with expenses, this is an excellent. I mean, the numbers are excellent, barring seeing the property, right, and doing the due diligence. What does the cap rate represent? The cap rate represents if I paid cash on this property, right? If I paid cash for this, 438, that would be my return on my money, 6.2%. Does that make sense, Paul? Right? So if I paid cash, so to give you an example, if I put 0 here and I put 100%, so I put up 100%, right? You come down here, you'll see that that matches that, 6.2, 6.2. That'd be your cash on cash return because you put up all the cash, right? Does that make sense, Paul? So it's just a return on investment if you paid cash. The only worry I have is finding someone who can do property management. Okay, so let's go a step at a time. Let's go a step at a time. Let's get it under contract, okay? And let's find out what the bank is saying to us to make sure we it makes sense, right? That's the big thing. Diana, you're saying access equals accept? What are we looking at? Yeah, that's fine. Yeah, for sure. Yeah, absolutely. I'm glad you got a lawyer working on it too. That's good. I like that very much. You want to make sure we don't mess up the deal. This is a good deal. We want to make sure it works. Okay, there's a second one. You can keep typing, Diana. To remove CMHC, they would accept a higher interest rate. No, if you add CMHC, your rate goes up. So if you decide you can pay CMHC, the actual insurance, you can pay it. CMHC is just one insurance company, right? There's other ones out there. But if you pay that cash, you can pay that cash, which in this case is $12,000, or a lot of them are just, they'll let you roll it into the mortgage and they just increase the rate. Say 2.74 now becomes 2.81, something like this. And you're paying a higher rate. But you can pay the insurance up front. If you sell the property shortly after, what do you mean by that? So if you sell the property right away, the CMHC is not going to mean anything because it's going to get paid out by the buyer. The bigger thing is your term, right? How long have you locked in the term? So if you know you're going to sell it quickly, you'd want a variable rate so there's no penalties. But that's in the case of us knowing we're going to sell it, within a year. You'd want to get a variable rate. Does everybody know what a variable rate mortgage is? No. If you roll the CMHC into the rate, is there a penalty? No, there's no penalty for the CMHC. There's not a penalty. There's a penalty for the term. Does that make sense, Devin? It's the term you pay a penalty for. So if you have a 5-year term on this mortgage and you sell within 5 years, there's going to be a penalty associated with that. It might be 3 months or interest differential. It depends on the contract and the agreement. But if you're breaking the term, you're paying it early, basically. A lot of the institutions are going to charge you a fee for that. CMHC is the insurance on the mortgage. Well, in this case, it's $12,000. So CMHC is insuring the mortgage for the bank, the 80%. That bank. So so you know, every mortgage is insured. Either the bank pays it or you pay it. When you put 20% down, the bank pays the insurance. You don't pay that fee. It's still insured. It's just you don't have to pay for it. But when you put less than 20% down, the bank or the institution wants you to insure the mortgage. So they pass that cost on to you. Well, typically your CMHC fee, most people are not paying the CMHC fee up front. So it's just rolled into the mortgage rate. So if the $12,000 You know, if you're paying 12,000 for CMHC, I would add that to your purchase price. Because it's 12K, right? I mean, you put up 12K. I mean, that's part of the cost of the purchase, right? And it's not like you can get that money back. So it's I would roll it straight into the property. So instead of 438, it would be 450, say 450,000. And that's really, you know, how the institution could view it too, right? If they're rolling it into the mortgage. So just, you know, talk to the bank tomorrow and ask them the costs. You know, the down payment that tell them to walk you through everything again. So the property's 438. I'm going to pay 12,000 CMHC fees. What's my mortgage going to be? How much am I putting down? Also, can I roll the CMHC into the mortgage? What would that cost? What would be the impact? What's the variable rate? What's the term rate? You know, if I go 5-year term, what is it? If I go variable rate, what is it? What's my mortgage payment? And ask them. I'm sure CIBC has a 10-year also mortgage fixed rate, which would be a little bit higher. But I mean, doesn't hurt to ask. Doesn't hurt to ask. Okay. Okay, 5 years. Okay, so find out what the variable is. The variable rate is, which will not be much better, to tell you the truth. The variable rate is more? No. No, variable rate's going to be less. Should be less. The variable rate is no. It's not a fixed rate. It's prime plus or minus whatever. No, not necessarily. Nicole, are you seeing the variable rate higher than the fixed rate? I'm going to talk to my broker tomorrow. I'm going to ask him. Well, variable rate, historically, a variable rate is less. It's less. So you're not paying a fixed rate. See, the fixed rate guarantees a rate for the bank. You know, so 2.74. A variable rate, you're taking the risk that interest rates move. So if the interest rates move to 7%, you're still only paying 2.74. Where a variable rate, yeah, exactly, 900 to 975. I mean, yeah, for sure. Typically, check it. I mean, you know, I don't want to say it is, but you know, typically the variable rate, because you're taking more risk, right? You know, well, yeah, I mean, it depends what you're doing, right? Depends what you're doing. So if you're selling a property in a year, within a year, you know you're going to do a quick sale, then you don't want a fixed rate. You want a variable rate. You know, so yeah, exactly. Talk to your mortgage broker, your bank, but the variable rates typically are a little bit less because you're taking risk. Now they were a big deal when mortgage rates were, you know, 6, 7, 8, 9. That was a big deal to get a variable rate. It was a huge drop difference. But now, because the rates are so low, the fixed rates are so low, it's not much different. But you know, it's something you want to look at. Yeah, fixed rate for sure, for sure. So just talk to your bank and ask them what's the fixed rate, what's the variable rate, what's the mortgage payment look like. Just these are simple, you know, questions you want to ask. Well, let's look at the other property. We have time to do that for sure. We got another 10 minutes. Okay, so let's look at the other property, which is right here. Okay, let's look at this property. So this is a different property. This looks like the same. Is this the same property? No, this is a different one, right? I thought it was these two we're looking at. These look the same. Are they the same? No? Okay. So, let me see. Oh, I see. I see. So these are two different fourplexes, correct? Okay, which one is the one we haven't looked at? Because they're both the same price. Is it this one we haven't looked at? It's this one, right? Okay, so, okay, good. 437. I'm just going to transfer it, okay? Just take me a second. 437. Okay. 3550. 4 units again. Let's look here. We got 20, which is the 85, and this time we got exact expenses 5,600. So again, this is a situation where the tenants are paying all the bills. Is that right? 441K. 441. Okay, so I'm looking at this one, yes? This is the one I'm looking at, yes? Okay, so you're going to give me the numbers. Okay, why don't we do that? All right, hold on. That doesn't look complete yet. Okay, give me 1 second. This one. Okay, let's go. Okay, so give me the numbers. Here we go. It's 4, you said 441. 3, okay. And what's the gross rent? What's the gross monthly rent? Abdel, what's, yeah, he got me. 3475, okay. Okay. 4 units? It's a 4-unit building? Okay, good. Expenses, is that right? 5,600? No, what's the actual expenses? For taxes and insurance, 3,400. Okay, so the tenants are paying everything else, is that right? They have metered, they're all metered, they're paying their own bills, right? Okay. So another 3,500 for utilities. Okay. Any other expenses? Okay. All right. Okay. So let's go back to the 80/20. We'll start there. So all this is right on this side now, right? This is all correct? Okay, good. Okay, so if we look at the standard 80/20, again, this property's, I mean, it's great. I mean, you're also talking about, you can see, folks, it's a 10% return on his money, plus he's making 192 per unit, right? So that's another 800 bucks. I mean, between these two properties, you could be making close to, I mean, 1,800, 1,600, 1,700 a month net cash flow. That's pretty excellent on these first two deals. If you could also get this one for 10% down from the bank, and we'll have to check. You can talk to the bank tomorrow. It's even better. I mean, this is an excellent deal again. You scored a couple good deals. As long as these expenses are good, I mean they're real. I mean you're laughing. Even if I'm just gonna do something, folks. Give me 1 second. Let's make this 20. Let's see what that does. It still works with the 10%. Like being able to put 10% down is a big deal, especially if they're gonna mortgage it all. Because figure it, folks, if you can get 90% at that low rate of 3%, 2.74, and you're only putting 10% down on your investment properties, wow, there's going to be some huge opportunities moving forward. And you rounded the numbers. Okay. That's me. I just added 20% total cost for your expenses to see what would happen. And we see if we add the 20%, if we make this full 20%, 20%, it's still at 10%. We're still making 117 per unit, which is great. And we're still making 12.8%. This to me is still an excellent find, an excellent property. Based on the numbers, of course, right? Obviously, we'd have to vet the property. Does the 20% of is accurate of what managing companies charge? No, 20%. The 20%, it's actually 10% is management, right? Property management is 10%. I just added additional expenses, right? I just said, oh, well, maybe there's more expenses. And instead of it being, $6,900, I just made it a flat 20%. Yeah, 10% is pretty standard. It depends where you are in the market. So if you're in a competitive market with property management, it might be as low as 8. If you're in a place that's kind of remote, it might be 12%. Yeah, I mean, it depends where it is. Really, it depends, what kind of competition there is for those property managers, right? So property managers, if you got a high concentration of them, usually they're competing, right? If you don't, it might be if it's some remote place that the property manager has to drive out to manage. If something goes wrong, then it might cost you 12%. So it really comes down to, what's there in that area, But excellent, another excellent find. I mean, this is an excellent property. This is an excellent property. Again, very nice 4-unit building. Okay, so the one thing too, I know the other property didn't have any repairs. What about this one? Any anticipated repairs? Renovated. What? It's all renovated. My friend, you got to get these properties under contract like ASAP. Like right away. Wow. You got to get on these. These are excellent. These are excellent opportunities. You're hitting a stride right here. Get them under contract. Worst case scenario, they don't pan out because the income wasn't right or something else. Still something to work with, but definitely get them under contract. These are excellent properties based on the numbers that you've shared. Hey, no problem. Realtors are people too. We want them to make money. So yeah, if they can make money, right on. That's awesome. That's awesome. Any questions about this property? So you need to get this one under contract too, my friend. Get the due diligence going on it, but get it under contract. Okay, any questions about this property as we wrap up? Okay, so the question is, do we need a 3-tier setup before any purchases? Well, you don't. Technically, you could leave it in your own name, but I would, if you're holding properties, I would say it's time to talk to the accountants and lawyers about setting up your 3-tier. Because these properties, you're going to hold them. So to maximize tax efficiency and protection, when you're holding properties, I'd say yeah. If you're flipping properties or wholesaling properties and you're not holding them, then I mean it's very limited risk. Very limited. It really gets, those corporations again, right? Those corporations have some tax benefits. Asset protection wise, it becomes a serious thing when it comes to commercial, right? Because you might have an environmental problem that could be massive, right? So, the best thing to do is consult your accountants and your lawyers, right? People that you're talking to, and let them decide based on what you're doing. But I would say is when you're starting to get into ownership, it's not a bad idea to start getting these properties under ownership. You don't have to do anything, right? But we're talking about, and you got to think long term, right? How many properties you're going to add in the next, 3 to 5 years, right? Even if you added five, you might be in a situation where it would make sense for you. Okay? Not necessary, obviously, to do the deal, but something you may want to consider. Awesome. Any other questions? See some people typing. So I found a good property that looks amazing on the sheet, but it's not a great area. What should I look for considering if buying the property? So if it's not a good area, Devin, I would say to you, consider flipping the property. Consider flipping the property. So if you're in rough areas, it could be a challenge, to hold on to that property. You're gonna have high vacancy, high maintenance, higher maintenance costs typically because of the attrition, the vacancy on your property. So I would look at Devin, getting the property, getting it to retail, and then flip it out or wholesale it. If the property is good and you can improve upon it somehow and flip it, then great. But holding it, Devin, it might be a problem. Might be a problem. Does that make sense, Devin? So Abdel, you're gonna have to I want you to talk to, based on these properties, you can talk to the attorney if they're asset protection attorney. If not, you can go to Ed for that. That's area of expertise for Ed Adnan. So you might want to ask him about that. Yeah. Just tell him, yeah, if you think it's time. Does he think it's time? Yeah, Adnan does that. Yeah, he does corporate and corporate structures and contract law and mergers and stuff. Some big stuff he does. His firm does. Okay. Any other questions before we wrap up, folks? Well, I mean, I tell you to go, join an investor club. Like, talk to people, network. It's totally cool. Um, you know, there's different groups, different types of groups out there. I think you try them out. I think that's a benefit to everybody. If you're building that network out, it's good to go to these investment groups, talk to people, find out what they're looking for. If you can help them out, if you can solve a problem, you get paid. So yeah, I tell you to try a few different ones and see which ones work for you. Maybe they all will, but I think it's a good thing to do that for sure. Wouldn't say no to that for sure. That sound good, Rodrigo? Good. Diana, can you resend me the email right now? I'll respond to it right now. I'm pretty sure that I did get back to you on it, but if I didn't, are those, because I remember you sent me a couple on questions and some deals I sent back. If I didn't, apologies. You send me an email right now, okay? I'll respond to it right now. Not a problem. No, no worries, no worries. Hey, folks, if you ever, this is it, right? If you ever a communication, reach out to me. Let me know, okay? I want to be able to help you and make sure you're moving forward. All right, folks, we're going to wrap up tonight's session. If you're good, type in yes or Y. My pleasure. My pleasure. Good, 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 good. All right, you know how to reach me if you need anything. I look forward to seeing you all next week. Next week, I will double check, but next week might be our last session for until the new year, and then we'll start up in the second week of January. But we will be doing this next week, so please, everybody, attend next week, and we'll have a good session before the year's end. Okay. Obviously, you can reach out to me anytime, folks. Please, I want to make sure you're moving forward. So have a great week. I'll see you all next Wednesday, and good hunt.